Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be taking a look at Tesla. Now I've decided I'm going to cover one of the top 5 in the S&P 500 each week going forward, so that basically allows me to go around over a 5-week period and catch up with the top 5. I tried doing all 5 of them in a single video a couple of weeks ago, but it took a long time to record and even longer time to edit and left my voice in a bit of a shoddy state when I came around to do that week's live stream for my patrons, which I think lasted for well over 4 hours, and I was struggling a bit by the end of it. So for the sake of my own faculties, for the sake of keeping videos a little shorter, we're just going to do we're going to be adding into our YouTube coverage one of the top 5 each week. So we're going to start here with Tesla, and the first thing we're going to do is we're just going to switch the count off, do some classical analysis first here on the weekly time frame. So just bringing up the exponential moving averages first, we can see how we've now broken the 250 weekly exponential average. This is essentially the first time we've done this since beginning our rally in late 2019, so we've stayed above the 60 and the 250 ever since then. This is the first time we broke it after a tremendously aggressive sell-off, and we can see that the 60 exponential moving average is now starting to roll over as well. Now if we have a quick look at the length of time we've now been correcting for since the high, it's now 428 days as of last week's close. This of course will add another week onto it if we go down and make another lower low, but for the moment we have a low in place. We don't know if it's the bottom. We could well make another bottom. For the moment that's the low as of last week's intra-week low, which was 428 days to that low. Price correction overall is now 75.44% down from high to low, a pretty significant sell-off. In terms of overall retracement, therefore, unsurprisingly because of the sheer skew of this rally, this now brings us into the neighbourhood of the 78.6% linear retracement here. Okay, we didn't quite touch it, but we got close to it. If we look at what essentially we did touch, what we did come down into, we've got some long-term support right down here that we bodied the candle above. We wicked through it, but only 111.81, which are these prior highs here, which there's four of them on the daily time frame. If we come down, I can see there's 2 candles here and there's 2 candles here, which are all prior highs, which was prior resistance, which now create support. It was also back tested here, that level was as well, so we came up into resistance, through it, and then back and tested it, and that has once again operated as support for the moment at least. We've now got these prior lows which were support. They may well operate as support again at 90.17, and then we've got lower support at 62.99. We can see if we just bring up our FRVPs for a moment and we bring up our supply and demand zones, you can see how we did wick down just into this little area of demand here. So a little bit of thicker trading here where we've come up to a level, come back, come up, come back, found buyers at these lows. A little bit of demand in here, just wicked down into it. As you can see, the trading's been very thin in these intermediate areas, some actual proper gaps within the volume profile, some huge gaps up here at the top. So if we found a little bit of support and we've bounced. Resistance above us, we've got some local resistance we should probably fill into the chart for the shorter time frame, but until we come back to any really significant levels, essentially where we broke what essentially resembles like a secondary neckline to this head and shoulders pattern we were looking at. So let me just shift that out of the way for the moment, get rid of these. So let's just bring that head and shoulders up. So we've got this level, these levels at like a diagonal, and this created this head and shoulders structure. We broke it, back tested the neckline and moved below. But if we take a horizontal from the prior lows, let me just move back a little bit, from these lows here, 1, 2, 3, and just move across them, you can see how that's essentially going to be the first real major level of resistance that we're going to be coming back into. We've also got this area above us here, which was prior demand on the way up, but really apart from local resistance, that's essentially the first major level we're going to be bumping into as and when we rally. Now if we make another low and put in a whole bunch of sideways noise here, that itself will become resistance to a future rally as well. So we can worry about that as and when we get a sign that we may have put in a bottom. So another feature on the chart is we've got a gap all the way back here on the daily time frame. Let me just zoom out. which has not gotten filled. Okay, now we don't always have to come back and fill gaps, but we're not now a million miles from it. That's 86 point, what was that, 86.7 through to roughly $75. It wouldn't take much more to come down here, fill that gap, find a deeper retracement level. Okay, that's also possible. Now if we just adjust the retracement we had here for the moment and we switch into the log, we can take a quick look and see what we're dealing with here. Okay, as you can see on the log scale, that gap is just above the 50% retracement level, which we're still a long way off in log. The golden zone's even deeper down here, and we do come back into much thicker demand down here, some stronger support levels down here, okay, and a lot more thicker trading, as we can see. It's all waiting down here, so we could see a really substantial sell-off if this continues to roll over. It does not have to do this. Does not have to come as deep. 70% is a very significant sell-off already. We have to remember though, you know, from a price point of view, if we were to stop talking about technical analysis for a moment and just consider, you know, discounted cash flow models and consider even simple PE ratios, we're still very overpriced here. Things got insane, absolutely insane at the highs, and long before then, to be absolutely honest. So we've still arguably from a fundamental analysis point of view, still got a lot to give up potentially to find fair value here, but stocks can trade well above fair value, can't they? We all know that. So we'll just have to wait and see what happens. Now on our indicators on the weekly time frame, we've done what I like to call a round trip, where we've come on a long-term time frame here, going back to May 2019, we've come up into overbought conditions, and we've slowly worked our way down over weeks and weeks and weeks, months and months and months, all the way to a weekly oversold condition. Now this can coincide with a bottoming of the market. It could also coincide with strong divergence building up between final lows. So for example, wave 4 into a wave 5, creating bullish divergence on the weekly time frame while price continues lower, but it could also just be a flat out low. Now one of the things we're always going to be keeping an eye on is, regardless of what our current interpretation of the count is, we always have to be open-minded, and we have to be open to seeing an impulse off of the low. So whether it's weekly, daily, 8 hour, 4 hour, 1 hour, if we see 5 waves up, right, on a time frame, and then we see 3 waves back, we're either going to be looking at a 3-wave move of an ABC, of a singular or larger correction, or we're looking at that potential first 1 and 2 off of a low. And regardless of what we're saying is going on in the longer term count at the moment, we have to be open to the possibility of changing it if we see that impulsive move off of a low, because that's going to be the first real opportunity on any significant time frame to enter long. Okay, now we can always set up the trade safely, as safely as we can, with a structural stop in place to ensure if we're wrong we get taken out. But either way, we're going to be looking out for that now, because we've come to extreme oversold conditions. Okay, so I think that essentially covers all of the classical analysis I wanted to look at. So let's come in now to the 4-hourly time frame. We can see also how strong the volume's gotten down here. Now, I had someone point this out to me last week, say, oh, look at the volume at these lows, Tom. It's really strong. Yes, it is. But we have to remember that volume is often as much a function of price as it is more and more people trading. You know, in the case of, it's a lot easier to trade, you know, on the 4-hourly here, 3.5 million shares of Tesla when it's trading at $100 as opposed to when it was trading at $400. See, so you're going to have more volume come in as the price collapses, just a function of price. So until we get volume off of the low supporting a bullish rally on the daily and weekly time frame, it's not really that significant. Yes, there is signs of a capitulation because of just how much the volume's built up, but that is just as much a function of the price coming down as drastically as it has. So there you go. Next thing I wanted to look at here, let's just bring up, we've got 2 regression trends to look at here. We've got a longer term regression trend, need to be in linear for this to make sense. Now we can see how we come straight to the This is from high to low, the current low. We don't know if we're going to go lower. This would expand to absorb new data if we adjusted it for that reason. At the moment, from high to low, we are right at the second 2 standard deviations from the mean. Okay, regression channel is a backward looking adjustment. So given all the data we have from high to low currently, we're at 2 standard deviations from the mean at the bottom of the channel. So we could spend a fair bit of time going sideways or even rally from here. We've pushed things pretty far. In the shorter term, we're still in a more local regression channel, which we have not bottomed out yet. Potentially we could still come low and still stay within this. It's a very severe move down. So now that we've covered all of that, now let's come and have a look at our actual count. So I updated everybody just a couple of weeks ago, so we don't need to go through the longer term count. Let's just focus on the shorter term. Okay, so let's have a quick look. Let's just turn the volume off to get it out of the way. Turn off the visual range volume profile for the moment. So a large primary WXY at cycle degrees, well, I've got this as. I do have alternate counts, but this is the primary for the moment. And I make this out to be 5 waves into an A, B, C into B, and then 1, 2, and what I think is now 3, 4, and 5 to come down. So we have got lower pricing to come. I know we don't know how long that wave 4 is going to take to correct. We don't know how deep that wave 5 is going to be, but once the wave 4 is in and we break new lows, we can then project what the 5 is going to be using the length of our 1 from our 4. Okay, and we can also use a 61.8% ratio of our 1 and our 3 from our 4 to find the 5. We can also use some other extensions, such as the 1618 of the 1 from the 4 also. There's multiple ways of looking for a wave 5, but we have to have a completed wave 4 before we can start guessing. Either way, it appears as though the extension was in the 3. It is a very typical subwave structure of 1 2 1 2 3 4 3 4. The subdivision is clearer than it is here in the 1, so we've likely had our extension in this move of 1 2 and the 3 being the extension. 4 to come, 5 will be probably more typical and less likely to be extended in that case. If we look at the target, fib target of our wave 1 from our wave 2, we can see we came to the 1.1318. If we adjust that to the prior low, this is just because of the possibility of this being 1 2 3 4 5 A B C flat into 2 with the 1 here, we can see we get a perfect 1618 extension, which is the most typical extension for a wave 3. I'm not quite sure which I prefer. Either way, it's likely bottomed, at least for the moment, at least for the meantime. So on that note, let's consider the potential retracement for that wave 4. So that should be hiding around here somewhere, unless I deleted it. Wave 4 target. So typical retracement for a wave 4 is between the 23.6 and the 38.2 or the 50. 23.6 and 38.2 is more common, 50 for a deeper extension. Now the invalidation point, we're going to say, is the bottom of the wave 1, which is back here, so we're going to add this into the chart for the moment because this is relevant. And what we'll do is we'll lock that in place, just adjust it to spot 19 like so. I'll grab these two and we'll put them in the wave 4 target, and I'll just say we'll rename that to be wave 4 target and invalidation. Like so, lock it in place. So we don't want to come back into this level. Well, do or don't, it doesn't really matter. If we come back into this level, then we're not any longer in a wave 4. So we would be very interested at that point as to what kind of structure we've built. If we built a 5-way structure, that would give us the opportunity to wait for a retracement over the next few months or weeks or months, and this is likely 1 or 2 or A or B at that point, as we've invalidated a further move lower in the bearish count as we have it. So that would be an opportunity to enter. This is also something to look forward to over the next few weeks. We might well be back around to this in time to witness that, who knows, or we may just see a wave 4 occur and then 5 more waves down to finish the primary count of 5CY4. So that covers the short term price action. there is a possibility of a bottom being in place. Okay, let me just adjust. It's down to how we look at this final structure. Okay, if we look at it slightly differently, and we look at this as 1, 2, 3, 4, as opposed to 1, 2, 3, 4, 5 into a correction, we look at it as an accompanying wave 4 to this wave 2, and then extend to the A here. We adjust our swing essentially. So instead of the correction being here, we get 5 waves complete to here. This gives us a 3 wave B, and that gives us a clear 5 waves down for a C, A, B, C, and that completes a Y wave. So, like I said, that's an X, Tom, but you know, a Y. If we have come down here and we have completed this structure, we will invalidate on a shorter time frame, and we will come up in 5. Okay, because we've bottomed down here at that point, in which case that was likely the bottom. Looking for a longer term retracement, shorter term price action. If you get 5 up on a shorter time frame and you want to take it as a potential 1-2 of an A wave or of a larger one, that's totally legit as well, and just scale it down using the standard trade setup and try and get in on it as safely as possible. And that is essentially an alternative count for the moment, but I'm happy to stick with the primary, just considering that until we see something different. And that is essentially all I've got for you on Tsla, guys. So a quick summing up, let's just bring back up that primary count. W, X, Y, potentially coming lower into lower supports anywhere. Once we've got that wave 4, we can project, but I would guess somewhere between 60 and 80 bucks for that 5th and final wave to come down. So we could see the price drop another 50% from here. That's definitely possible. And I'm expecting 5 waves to complete within a C of a Y of a 4, and then we would have had a very significant repricing of Tsla by the time we finish that. However, if for whatever reason we invalidate this count, so we do not come into this target zone, we go through it, we break this invalidation at 166.19, and we clearly see 5 waves off of the low, we have to be open at that point to this being the bottom, and we have to start thinking in a bullish sense, looking for a retracement, because whether we're getting A, B, C, we start with 5. If we start with 5, it's a motive structure, so it's either a zigzag or it's 5 of a larger scale. You see what I'm saying? So in that sense, we've got to just keep our eyes open, really. In the meantime, expecting some move back up, probably some further retracement higher as we flesh out what this is going to be. It could be a flat, it could be a zigzag. We'll have to wait and see, but expecting a way forward to form before coming down in a 5. Alright then, guys, thank you very much for joining me. I feel like we've got this done in a bit more reasonable time, and we'll cover another one of the top 5 in the S&P 500 next week, and in 5 weeks time we'll be back here looking at Tsla and see what we've got. Alright guys, thank you very much for joining me. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon supporters. Your support is greatly appreciated. If you're interested in becoming a patron and unlocking all the many benefits, then feel free to head over by following the link in the description box below, have a read of the various tiers, and feel free to sign up at your leisure. We'll be glad to have you. Alright guys, take care of yourselves, and I'll be back with you soon. All the best, bye bye.